Welcome to Caching Waves. This is an Elliott Wave update for Bitcoin. Now this video is going to be more trading strategy and using guidelines to get on the right side of the market. And I'm going to go over a couple ways we're able to manage this trade the last week. And first of all, I'll talk about this one to begin with. I'm not just doing this because I was right, just to be clear. I just want to show you why I did it, how I manage my trade, and my expectations from here using rules and guidelines. So I posted this on August 13th, which was right at 61,465. That was the one-to-one extension. And this was down on a 3-minute chart. And I posted that I opened a short trade. I was looking for a pivot from this area, or alternatively, one more move to the upside and then the pivot and continuation to the downside. That was right in this area, right here. Pretty much the exact high. So we did get that alternative, but it was close enough. It was obvious we were channeling in parallel lines, the W off of the X, and we ticked the top side of the channel and reversed from there. Now, the next video after that, you're welcome to go back and check. This was my primary count, that we had an ABC, X looking for an ABC. And what I suggested in this video was to use your guidelines to stay in the trade. That's what I did. I kept pulling the fibs as this was dropping. And because we usually stop before the 618 in a B wave, I put my stop just past that at the 66. That's my standard area to put my stop. That way I allow the large enough correction before it significantly switches probabilities that I'm wrong. I use the 66, some use the 65, some use the absolute high, but I also wanted to make sure that I had profit locked up. I didn't want to give any money back if I was wrong. So that's kind of the most area I allow the market to go before I start second guessing my analysis. Now, here we are. We've reached our target, exactly where we want it to be. The one-to-one extension of A off of B for C. W also equals X. Equals Y. So what do we do from here, right? So this is where we analyze. So my stop has been moved to this previous pivot right here. Now, one tick above it, I'm at like 59,850, guaranteed about a unit and a half, although currently up about a significant amount of units. I'm not sure exactly, but pretty decent. So as of right now, a couple things to keep in mind of. We have multiple counts on the go, and we want to try and get on the right side of things. I got some comments saying, why is your bias to the downside? Just to be clear, when I say bias for all these different scenarios, what I mean when I say bias, which also means my primary count, is the count that is following the guidelines the closest. That's what I mean. There's multiple counts. Some are following guidelines better than others. So I go for the count that is following the guidelines the most closest out of all of them. That's the difference. Okay? I'm not biased because I want to be bearish. I'm bearish because that is the count that is showing the most accuracy for the guidelines right now, right? That's why. Okay, so an issue with us being complete in this area is the amount of time that has passed. So if we follow our guidelines again, we want our Y wave to take about the same amount of time as our W wave, if not longer. That is the one-to-one right here, which takes us into Saturday. And all I did was take the time fib tool, take the length of W, extend it off of X. That's our guideline. That's also why I drew this like this. Now this was a fast zigzag if you go down to the smaller time frames. This is either a impulse or a diagonal. Either way, it is a obviously an A wave, either way you count that. Okay, now other things to realize. Okay, so this is our A wave. This is technically our B wave now in this scenario. And our C wave. Remember, we talk about time. Usually, our C wave will be on more of a slope than our A wave. Our C wave is more impulsive looking than our A wave. That's an issue, right? That's an issue. We'd want our C wave to be on less, something like this, right? Again, time. I can use my time fib tool, take it from the A, throw it off our B. That's kind of where we would have liked our C wave to come to, at least a 1-to-1 in time. Again, just a guideline, not a rule, but we have to say, okay, what's fitting guidelines the best without breaking a rule? So in this scenario, my expectation is if this is our A wave, this is our B wave, and this is our C wave, and we are complete, what's the confirmation that we're complete, or at least the probability shift? And that's this high, right? Because in some bearish scenarios I'm going to show you, these would be labeled as 1-2-1-2s. And we break the rule that that is a 1-2-1-2 once we cross over the beginning of that second one, right? And where is our correction likely showing us that it is complete? When we break that B wave. That's why I tell you sometimes when I'm unsure, I wait for the break of that structure and I trigger my buy order in. That's why I do that. I want the market to give me probabilities that the count is correct. Okay? Going from there, if our correction isn't correct, what are we likely doing here? Well, we can be quite bearish potentially. Here's one of our scenarios that I posted last video, and that is the unlikelihood that this is a 1-2-1-2, and we're coming down for our 3, 4, 5, 4, 5 to make a larger wave 1 to the downside. Now this one is not following guidelines ideally as well, but I only drew it because if we do make the structure to the downside, I want to make sure obviously I'm paying attention to every scenario that can play out. I still don't give this much validity until these waves completely fill out. Now, one thing I'm considering that is low probability is that this is potentially a 5-wave move. It does look very 3-wave-ish, but there is a way to count this as a 3, 4, very tiny 5. I would actually prefer this be a 5-wave than this 1-2-1-2 because of the deepness and the size of the second 1-2. Usually we want a second 1-2 to be smaller in size than the first, right? So if this does come down, I think I'd prefer this count as a 5-wave impulse from here. It just looks better, the correction time as well. And in that scenario, I'm actually going to do that right now in real time, is call this a 1-2 as a alternative. You can see the wave separation as well. So this is a diagonal, leading diagonal here. And it is expanded. That's our first wave down as our A or wave 1. But you can see this can be counted multiple different ways. This is where I would count it as a 1, 2, 3, 4, 5. That was our ABC scenario. Or you can count it as our 1. We get a flat 2, 3, 4, 5, and then our 4, 5. That's why I can count it both different ways. Obviously, it doesn't have the ideal look, but as long as it's valid, I have to at least consider that in a scenario. Now, if this scenario is a 1 and a 2 up to here, this would most likely be a 1, 2, 1, 2. So if that is a 1, 2, 1, 2, it's important to note that this should make some sort of small correction and absolutely fall off a cliff, right? Because if we're getting a 1, 2, 1, 2, 1, 2, the most I like to do is 3 1 2s in a row before giving it very low probability, then we should see that sort of reaction. So if we start grinding over here, coming back up, doing something like this, something's wrong, right? It's not likely a third wave. But if we do make this sideways and start to collapse, then I'd be like, okay, this is the one actually filling out. So just want to be clear of what I'm doing in this area. And again, that gets invalidated at this area right here, right? That pivot. Okay. So that's my bearish scenario. The ultimate bear. And we'd be looking for 618 extensions would be ideal for our smaller 1-2s. So if it does follow that, we have to go with the count that's following the guidelines the best. So if that is our 1-2, looking for 618, between the 618 and the 100, there it is, qualifies. So that would be our 1, 2, and this would continue to the downside, right? In fact, it looks like we might even get an extended third since we came past the 618. So that's what I would be looking for here for that bearish scenario. Targets for that third is the 1.618 for that third. We get our fourth wave correction and our fifth wave to the downside. We can always get extensions. If this is 1, 2, 1, 2, 1, 2, we could come down to that 2.618, right? But the important thing to do is to watch the reaction. Do we just make a small correction here and it's a third 1, 2 and then absolutely collapse? Or do we do something different? That's why I always say, I want to see what happens at this area. I need to see if it's corrective or impulsive. What if we start doing this? What if that's the reaction? Well then, if that's the reaction, I would say, okay, I'm stopped out. There's our ABC. Yes, we didn't come to the ideal spot for our Y wave, but we do have a completed ABC and a 5-wave move off the low. So this is most likely a wave 1. And I'm going to look for a long in this area. Stopped out here. Oh, we got 5 waves. Let's look for an ABC. Right? Easy. But if we do this and collapse, oh, I'm staying in my trade. And guess what? As soon as we break that low, stops moving here. I'm not giving up this trade yet. Right? Okay, what are our other options here? Other options we talked about was a triangle, where this is our triangle Y to complete our larger fourth wave. So in this scenario, this would be our W wave, X. This could be our AB, 1, 2, 3, 4, 5 for our C wave as a WXY. Same thing, look for some sort of impulse here. Look for the reaction after, get our D and our E, and that's our wave 4, right, as a Y wave. There is one other scenario, which if we back out to our 4-hour WXY, we talked about the fact we were looking for the C wave to complete, because we can count this as 5 or 3. So Y can be complete and we can be moving to the upside, or our Y wave is over here. If this gets complex or it does shoot down very quickly, this is our ABC, WXY. I am open to the possibility, since this would be an impulse to the downside as our A wave within the Y, that if we make this move, this could be a wave 1, 2, 3, 4, 5 as a ending diagonal, and our Y wave would be over here as a C wave as a diagonal. So that's another way we can come straight down here without making impulses, right? Be a lot of overlap, but we should be protected again in these scenarios with the stop up here. Now all I've been talking about is bearish scenarios. Let's look at the bull case. Bull case, again, very low probability to me, but not invalid. That would be a 1-2-1-2. We're at the 786 of the second 1-2 of one lesser degree. So any lower than that, I'd say it's over. And the way I would count this, again, is ABC X, ABC complete. And the structure I'd want to see broken is right there. Long there at the break of that level. Stop at the low. Targeting pretty high. Our fifth wave target is somewhere up here. That's a 4-to-1 risk reward. But I'll be ready for that if we break that level, right? Easy. Not complicated. Now, why consider this low probability? Well, we have wave 1 and 2. Again, our next, our smaller wave 1, 2 of one lesser degree, we usually want to be quicker in time than the first one. So I would prefer to see something like that to launch. This is past the 1-to-1 extension on linear scale. We usually want to see a 618. As you can see, 1-to-1 extension of wave 1 off wave 2. And look at the time as well. There's our wave 1 and 2. We're really pushing it, right? Again, not invalid, still technically valid, but low probability. And I'd consider that scenario if we come up and break this high in like a nice 5-wave move, right? I totally want to buy that after that. So that's what I'm looking at, guys. I hope that's helpful. Realize the structure breaks are the most important. My stop is at this high. And I'm okay with giving back that profit because of the potential that we continue to the downside. And if we break that level, nice 5-wave move, just get back in the entry. No problem. I'll flip long, right? But as you can see, currently it doesn't quite look right for the amount of time we've passed. This C wave is quite impulsive compared to the A wave, much more drastic drop in a short amount of time. So I don't think we're quite done here yet. All right, guys, that's it for Bitcoin. Thanks for watching. I'll see you on the next one.